Okay, so this video is about accounting cycle. This is a very important concept which needs to be learned right here before moving forward. Accounting cycle, it is a series of steps which tend to repeat themselves again and again during a particular year or a particular period of time. Now, every time the accounting process is going to begin, it is going to start with journals. Now, what are journals? Journals are the day books. They are the books of prime entry in which the initial or prime entries are made by an accountant. From there, from the journals, we move to ledgers, where journals are basically books of prime entry where the initial entries are made, and then the initial entries are filtered through the ledgers. We are going to discussing each of them in a lot of detail a little later on. And then from the ledgers we extract balances or a list of balances, which is called a trial balance. This list of trial, this list which is of balances, which is called trial balance, it has 5 different types of items that we started talking about when we began the course. The 5 items are basically assets, liabilities, capital, incomes and expenses. Now, those 5 items which are extracted here, through the trial balance, they are then subdivided in the form of income statement and statement of financial position. Now, I have written the first 3 steps with the blue and the last few steps with black in order to create a distinction between bookkeeping and the accounting steps. The first 3 steps are related to bookkeeping mainly. And when we start talking about the last few steps or the last 3 steps, now we are moving to analysis and interpretation as well. So this is recording part, the first 3 steps, and then analysis and interpretation is going to come into play as we are going to move forward. So from the trial balance we have 5 items. I told you the 5 items, incomes and expenses. The 2 items which are called incomes and expenses. Expenses are subtracted from incomes inside the income statement in a particular format prescribed by International Accounting Standards Committee, and that those 2 items, they are going to make up the income statement through which profits and losses can be calculated. And the trial balance, the remaining 3 items which make up the accounting equation, that is assets equal to liabilities plus capital. The accounting equation is actually proven through statement of financial position, and so 3 items are listed inside the statement of financial position, which is also called balance sheet. So we are going to basically prove the accounting equation through this statement or statement of financial position. These 2, income statement and statement of financial position, are also called final accounts, and after a statement of financial position has been has been formulated out of all the available balances and everything else, then we are going to make an adjusted trial balance, because quite a few adjustments are going to be made in the statement of financial position, and those adjustments are going to result in the original trial balance getting adjusted through the closing entries, and then the whole process keeps on repeating itself. This is what you call as accounting cycle.